Good morning, students. Let us start the chapter 12 balance of payment. First of all, what is meant by balance of payment? Every government keeps a record of the transaction that take place between the country and the rest of the world during the given period of a time. That given period of a time means 1 year's time. This record is termed to the country's balance of payment. Balance of payment is an accounting statement that provides a systematic record of all the economic transaction between the residents of the country and the rest of the world in the given period of a time. So, who are included in the residents? Resident of the country include the individual firms and government agency. However, residents do not include the diplomatic staff, foreign military person, tourist migrators, workers, and the branches of the foreign company, even though they have worked or operate within the domestic territory of the country. Already we have discussed about the who are the residents on this topic in the unit number 1, chapter number 2. Now, what is the economic transaction? The BOP is a summary statement. It is in which all the economic transactions has been be between resident and the rest of the world be recorded. Okay. So economic transaction refers to those transactions which involves the transfer of a little or a title or the ownership of the goods, services, money and assets. They are categorized in three parts. Most probably in the three parts, actually it was categorized in the many under many accounts, but three or four are main: visible items, invisible items, unilateral transfers or capital transfers. So visible, these include all types of physical goods, export and import, and that is called the visible items. Invisible items of the trade refers to all types of services like shipping, banking, insurance, etc., which are given and received. This is called the invisible items. Unilaterally Unilateral transfer include gifts, personals, remittance, and other one-way transactions. And capital transfer relate to capital receipt through the borrowing of sales of the assets or capital payment through the capital repayment of purchase and assets. So the structure of payment of transfer: credit side, in all inflows or sources of the foreign exchange are recorded. Debit side, all outflows or uses of foreign exchange are recorded. In the accounting senses, BOP is always, balance of payment is always balanced like trial balance, as it is prepared as per double entry system. However, in the economic sense, BOP needs not to be always equal. It means BOP can be balanced. BOP is balanced when the receipt of the foreign exchange are equal to the payment of foreign exchange. Surplus, when BOP is in surplus when the receipt of the foreign exchange are more than payment of the foreign exchange. And it's a deficit. BOP is in deficit when the receipt of the foreign exchange are less than payment of foreign exchange. So now we will discuss about the two type of components of the payment of account: current account and capital account. So we will discuss both the things in detail. Components of all run. Before that, I will just give you a short introduction of the meaning of balance of trade. Balance of trade, BOT, refers to the difference between the amount of export and import of the visible items. Balance of trade is need not to be balance itself. It is not necessary to export of goods is always equal to import of goods. Balance of trade can also be surplus, positive and deficit. Balance of trade: surplus if the country export more goods than it import. Deficit when the import of the goods exceed the export goods. So this is the thing of balance of trade. Now in the next we will discuss about the current and capital account of balance.